This is Business Incorporated. Thank you for joining us. I'm Chimeze Obi Iwago. Coming up on the show today, Sudan's central bank starts circulating new £50 banknote. JP Morgan sees a busy season for London IPOs out of Africa. Plus, South Africa's net foreign reserves fall to $42.87 billion in May. Let's get started with the show and beginning with Africa. All the markets tilted sunny side at intraday. The South Africa's JSE index was up 0.87%, even as the country's net foreign reserves fell to $42.87 billion in May from $43.115 billion in April. Now, the central bank data showed gross reserves rose to $51.146 billion from $49.539 billion. And here in Nigeria, the NSE index was up 0.29%. Egypt was up 0.14%, and Nairobi ended in the green on Wednesday. In the Middle East, only the Abu Dhabi market was looking green at intraday. The index was up 0.22%. Dubai was down 0.46%. Qatar led losses by 0.92%. And Saudi Arabia was down 0.73%. In Europe, markets traded higher in early trade, boosted by a rally in U.S. stocks in the previous session. Let's talk to Ulrich now, my colleague in Frankfurt. Hello, Ulrich. Good afternoon.
Hi. Good afternoon.
Good afternoon, Ulrich. The London Stock Exchange today experienced a 1-hour delay to its opening due to system malfunctions. Are market traders getting upset at the raft of incidences of high-profile trading system glitches?
I think there's annoyance and there's a feeling that, yes, it is costly if you miss out on trading, but there's not yet the sense that there's outrage or a wave of protest, a wave of rebellion from people in the markets. I talked to one trader here who is on the Frankfurt floor and who saw what happened in London as well. And he said, you know, the benign reaction is one thing, but one is worried what's behind it because you don't hear what's behind it. Of course, when people hear about these sorts of glitches in electronic trading, it's all electronically based today, then you have the feeling that there might be a hacker behind it. With what aim, with what result, what kind of knowledge do they gain perhaps from such an action? Nothing like this is ever confirmed by the exchange companies, but the worry is there, and of course the worry is there that it never really comes out what's behind these glitches.
Okay, and two New York firms have filed papers with the U.S. Secretary to approve a structured exchange-traded fund, or ETC, for Bitcoin, which may kick off with a record $200,000 price per share. Is this a development that traders and investors are given any particular notice?
At the moment, there's not that much focus on Bitcoin, at least here in the European markets. People were very much Bitcoin affinity when the price was going up, and then, of course, when it came crashing down as well. But at the moment, it's a little bit out of focus, and a lot of people I talk to aren't interested at all in Bitcoin for themselves or for their customers. They say there's just too much risk. It's not a real currency. It's a speculative agent. It aids people who do criminal things. But of course, there is great interest in the technology behind Bitcoin and the blockchain. That's sure to play a major role in the future of exchanges of all kinds. With attention to this particular product, I think there's raised eyebrows because the people who are launching this failed with an earlier attempt to launch a product. Now they've upped the price. It's a hefty $200,000, as you mentioned, and people are interpreting this as an effort to gain the regulators' approval because the regulators say if it's too cheap, then it's too attractive for retail investors. They risk their money, they get hurt. With a price of $200,000, you're addressing institutional investors, and that might be a better deal, might give them more of a chance to push this product through at least. That's what I'm hearing.
Okay, let's look at data coming out from Germany where you are, and that's the latest industrial orders dropping by 2.5% in April from the previous 1.1%. This shows the fourth consecutive negative reading. What sectors are responsible, and how is the DAX trading this?
The DAX is basically not trading this per se. As you can see behind me, the DAX is going down. It went down from an earlier higher position. And the euro, at the first glance, went down on this news of the industrial orders, declining the fourth month in a row, but since recovered, and it's now trading over $1.18. Both DAX and euro are responding primarily, though, that's my feeling from the market here and talking to people, the interest rate discussion, the quantitative easing discussion in the Eurozone, of course, rates also going up on U.S. Treasuries. That's the main driver there. But on a better day, if the industrial orders had come in at a more favorable reading and had indeed increased instead of going down another time, then that might have been able to stay the movement in the market at least a little bit. People are disappointed. A nosedive is what one person said. Ouch, it hurts. And on the other side, people are saying, yes, it is a decline. Yes, there was a huge decline in factory orders from the Eurozone especially, almost 10%. But all in all, order books in Germany are still filled quite richly.
All right, thank you very much for those updates there. Thank you, Ulrich, and enjoy the rest of the day.